All right, let's get right into it. For centuries, insurance has kind of worked the same way. But right now, there's this huge wave of tech that is completely rewriting the rulebook. We're talking about a massive shift away from that old one-size-fits-all model to something that's deeply, deeply personal. And we're going to break down what that means, both the incredible promise and, yeah, the hidden dangers. I mean, let's be real for a second. Haven't you ever been stuck filling out endless paper forms, waiting forever for a decision, all while paying a premium that doesn't feel like it has anything to do with you? It all just feels so outdated. Well, that frustration is exactly why the entire industry is on the verge of its biggest shakeup in history. You can really see the difference when you put them side by side. The old way, think stacks of paperwork, long, frustrating delays, and pricing based on really broad, generic categories. But the new way? It's a completely different world. We're talking real-time data, instant service thanks to AI, and prices tailored right down to your individual habits. It's a giant leap forward. So, what's actually powering this massive transformation? Well, let's open up the new tech toolbox and take a look at the engines of this change. These are the key technologies that are building the future of insurance as we speak. It really all kicks off with something called the Internet of Things, or IoT. Now, that might sound super technical, but the idea is actually pretty simple. It's just physical objects, like your car, your fitness watch, even your home thermostat, that are connected to the internet. And they're constantly collecting and sending out little bits of data in real time. This constant stream of information, that is the fuel for this entire revolution. So here's how that whole journey works, from you to the insurance company. First, an IoT device, say that little box in your car or the watch on your wrist, is collecting data. Then that data gets beamed out wirelessly. It all ends up pooling together in these massive digital storage spaces they call big data lakes. And finally, this is the magic step. Artificial intelligence and machine learning algorithms sift through all that information, looking for patterns. That's how your daily actions get turned into powerful insights. Okay, now this is where it gets really, really exciting, because all this tech isn't just happening in a vacuum. It has a direct impact on you, the customer. We are talking about a new kind of insurance that promises to be smarter, way faster, and hey, maybe even a whole lot fairer. For example, let's take car insurance. For the first time ever, your premium doesn't just have to be based on your age or your zip code. With this new thing called usage-based insurance, the price you pay can be directly linked to how you actually drive your car. And the level of detail they can get is just wild. We're talking about a device that can track your typical speed, how quickly you accelerate from a stop sign, how often you slam on the brakes, and even what time of day you're usually on the road. All of these little data points come together to create a risk profile that is unique to you, which means safer drivers can finally be rewarded with lower premiums. And it's definitely not just about cars. The exact same idea is starting to transform health insurance. All those wearable gadgets are now making it possible for you to share your health data, creating a potential pathway to get better rates for living a healthy lifestyle. Think about it. Insurers can now look at metrics like your daily step count, your blood pressure, your heart rate, maybe even your blood sugar levels. But beyond just setting a price, this data could act as an early warning system, helping you stay on top of your health and encouraging better habits along the way. And what about customer service? We've all been there, stuck on hold forever. Well, that's getting a massive upgrade too. Now you can often interact with an AI-powered chatbot. It's basically like having a personal assistant for your policy that's available 24/7. It can answer your questions, suggest the right coverage, and even start processing a claim, no matter what time it is. And that brings us to the claims process, which, let's face it, is usually the most stressful part of having insurance. But that's changing in a big way. With this new technology, simple claims can be processed almost instantly, with the money settled right into your account. No more waiting weeks for a check in the mail. So if you just kind of zoom out and look at the big picture, you can see this incredible chain reaction. The AI allows for much better risk assessment, which then allows for those personalized premiums. It powers those super fast settlements, which builds more trust with customers, and it's amazing at spotting weird patterns, which is a huge help in detecting fraud. It all just adds up to a way, way more efficient system for everyone. But, and this is a really big but, it's not all a simple, happy story. With all this incredible power comes a whole new set of really complex problems. We have to talk about the other side of this coin, the AI dilemma, and the very real risks that are hiding just beneath the surface. This is the absolute central question, isn't it? An AI model makes a decision. Maybe it denies someone coverage, or it calculates a premium incorrectly, or just makes a flat-out mistake. So, who's to blame? Is it the developer who wrote the code, the insurance company that deployed it, the AI itself? It's a massive legal and ethical gray zone. Let's just break these risks down a bit. First up, you've got the danger of creating bias. See, an AI only knows what we teach it. So if you train it on historical data that already contains unfair patterns, the AI can learn those biases and, in some cases, even make them worse, leading to unfair results. Then you have that huge accountability problem we just talked about. If nobody really owns the error, you could end up in these endless legal fights. And, of course, there's the economic side, the risk to jobs as automation starts to handle more and more tasks. And that leads to an even broader economic risk. Look, building and using these advanced AI systems is incredibly expensive. There is a very real danger here that only a handful of huge, wealthy companies will be able to afford them. That could concentrate all the power, kill competition, and leave smaller businesses completely in the dust. So, what's the path forward? How do we take all of this amazing potential and use it for good, while also managing these very serious dangers? The future really is a balancing act. It's going to require a smart, deliberate strategy for managing this revolution. The way forward seems to come down to a few core ideas. First, we're going to need clear regulations to guide how AI is used. But it can't just be up to the government. Inside these companies, the board of directors has to take ultimate responsibility for the risks. That means beefing up the role of the chief risk officer, and maybe even giving that person a seat at the main table on the board to make sure these tech risks are being managed from the very top. And all of this leaves us with the one big question we have to keep asking. We know for a fact that technology can make insurance faster, more efficient, and way more personalized. But will it make it truly fair? Or will it just invent new, more sophisticated ways of creating winners and losers? That is the balancing act we're all going to have to figure out as we head into this brave new world.